Welcome to the Elegant Warrior, Marcia Dawood.
Hello. Thank you for having me.
Oh my gosh, I'm so excited to have you. It has been a long time coming. Your book, Doing Good While Doing Well, is so good. And it's so important. And I really think, well, I'll speak for myself. I know you, and I knew you had written this book, and I bought the book, and it sat in my to be read pile. And I know that it's about angel investing. And I know I don't know a lot about angel investing. In law school, I was on moot court and I did an argument about corporate law, and it was a lot about investing. And I never really understood it, which is terrible. I was like arguing, sort of making the most of what I knew. And so it sat there. And then when we decided to do this podcast, I'm like, well, I guess I better read this book. And I just learned so much. So let's start with the very basics, because most of my listeners probably have only, well, I don't want to presuppose, but many of them haven't even heard of angel investing or don't know what it is. So, what is angel investing?
Yeah, well, I'll tell you, I didn't know what it was. And somebody invited me to a meeting, and I was like, what is an angel investing? Well, first of all, what's angel investing? And then what's an angel investing meeting? So I was just so confused. But basically, I was living in Pittsburgh at the time. I went to this meeting and I got to see entrepreneurs that were local to the community who were building companies and working on innovation that I found totally fascinating because I had been working in corporate America and I was kind of doing the same things, expecting different results, kind of thing for years and years. And things were going okay. But when I went to this very first meeting and I saw some local entrepreneurs talking about what they were working on, and I thought to myself, oh my gosh, have I been living under a rock? I really think that, there are so many things out there I had no idea were happening. And so as time went on, I started to go to a couple more meetings, learn a little bit more about it. And to your original question about what is it exactly, it's basically when someone invests money into a private company using their own money. So they're basically taking their after tax dollars and investing that into what we call a startup, which is essentially a private company that has some level of scalability to it.
Yes. And one of the things that you talk about in the book that I think is really important is to dive into why this matters, why my listeners would want to become angel investors. And then we'll get a little bit into the how. But I want to spend some time with the why, because I think
Yeah.
that the why will drive people to want to know about the how. So why does this matter? Why would someone even care about being an angel investor?
Yeah, well, for a long time, I believed that the only way that I could really give back as an individual person was to either donate to charity or volunteer for a charity. And those things are absolutely phenomenal. However, the amount of charitable giving in the US is about $475 billion a year. It's a lot of money,
Yeah.
but that's equivalent to only about 1% of the value of the US stock market. So, if we want to affect significant change and really affect innovation, especially in areas like women's health, things that are needed for underrepresented people like people of color, disabled community, all of those things, we're not going to see that type of innovation unless we're backing the founders that are really working on solving those big problems. So, I started to see as I learned more and more about this asset class, we call it, which is essentially a different way to invest. That it is a little bit more illiquid, meaning that you're not going to be able to trade it like you would like Apple stock or something like that, but you do have the ability to pick what you want to invest in and it can align with your values. And I thought, well, that's really cool. And I can actually get to know the entrepreneurs and learn about what they're doing, why they're doing it. And if it's something that I really care about, especially I care very much about women's health, and how can I be a part of that? And wait a minute, I actually can be a part of it. And I can use not just my dollars, but I could use my time too.
Yeah, I think that when I read through the book, there's so many things that for me became a why. right? So, as you said, if you're going to give money to a charity, and we'll talk about giving money to a charity versus investing in a fund and how that sort of compares in a minute. But if you have things that you care about, causes that you care about, women's health is one that you mentioned. And I know your podcast today, the day that we're recording, is a lot about women's health initiatives and investing in those. But women's health is an example, or the environment is another example. This is an opportunity to invest money into things that may and could and most likely will, in some senses, in some examples, actually make things move forward in those areas. So that's one why that really resonated with me. Another why is that the money that you are investing actually helps to create jobs, because these organizations that we're investing in actually have to hire people to do the work. But I think for me, another why that I would love you to dive into, because this is another thing that I had not thought of. And once you brought it up, I was like, of course, is the networking piece
Mm.
of this. So tell the listeners a little bit about how angel investing is also networking.
Yes. So my husband's a huge golfer. I always tell the story. And he would go out on to these, trips or even just go out to play. And he would come home and say, "Oh, I got to meet so and so or such and such." And I got to a point where I'm like, okay, I don't play golf. I'm not necessarily annoyed that you're out playing golf. I have other things to do. However, you're meeting people that I would never get to meet. And I would kind of be like, jealous that he was getting to meet people. He would come home and say, "I got to play golf today with the CEO of yada yada." And I would just be like, geez, where do I find my golf course? Where do I get to meet people that I wouldn't necessarily meet in my job? Okay, sure. You're going to meet the people in your community. You might meet the people that are around your kids' activities. You might meet people that are working in your building or even working in your company. But how are you going to meet people that are in a completely different industry, doing something totally different that you wouldn't necessarily meet, but you totally align with? And that's when I started to do angel investing, I thought, this is so cool. I'm actually getting to meet people and we're working on something together because we're evaluating a company together. We're looking at the entrepreneur themselves, we're looking at the overall company, and we're looking at the problem that they're solving. And by doing all of those things together and using my level of expertise, their level of expertise, somebody else's, and kind of putting that whole mix together, it's like, wow, I got to not only know you. I mean, sure, you could go on a coffee meeting and stuff like that with people, but now you're actually working on something that you both genuinely care about,
Yep.
and you're having conversations that are very different than if you just met for a coffee. So
Abs-
I love it.
Absolutely. I was like, this is such an untapped area for me for networking. It really has me motivated. I mentioned it to you before we started, but it has me motivated to think about how I can become part of this world for the networking opportunities and the opportunity to sort of change the world. And that's not hyperbole. One of the things that I want to talk about is female founders.
Yeah.
So there's a lot of talk about the fact that 3%, and correct me if I get any of these wrong. These are stats that I wrote down I took notes from your book. But 3% of funding goes to female founders. Is that about right? That's the statistic.
When it comes to venture capital, so venture capital is when a fund manager will actually raise money from people or institutions, and then they invest in companies. And they usually have much, much bigger dollars than the angels do. Angels write out of their own checkbook. So you'll see angel groups in different areas, and there are angel groups and angels all across the US in every city, every town. But the idea that, a venture capitalist has this fund and they have a lot more money, so the amount of that money that's going to women is probably 2 or 3%, which is abysmal. People of color, even less than that.
Yeah.
But in angel world, it has gotten better. Now, I think when I started angel investing in around 2012, it was still pretty bad, like maybe under 5%.
Hmm.
But slowly, more and more angels have started to get involved who are women. And I always say that, look, the only way we're going to change these statistics is if we start getting more people involved that look like the founders. So when I first went to an angel investing meeting, like a big conference, like the Angel Capital Association Summit, there was a line at the men's room.
Yeah.
So that told me a
In the
lot,
book.
right?
Yes.
I was one of the only
Yes.
women in the room. and there's a line at the men's room. I'm like, okay, we got a problem here. So then as time has gone on, the statistics and the data that we have at the Angel Capital Association level is probably, it's more like 25 to 35% of capital is going to female founders, but it's like the small piece of the pie. It's
Big.
not that big pie.
Yeah. Yeah, it's not even an equal piece of the
Right.
pie.
Exactly.
And what are the numbers there for Black owned or minority owned?
Well, that's interesting. So they're not that much better than in the venture capital world. However, we did see a spike in 2020,
Yeah. Yeah.
and we were very hopeful. Actually, the first time I remember this very specifically, the first time Black founders were getting about 15% of the funding in 2020, and unfortunately, the statistics we have from 2021, it went right back down.
It's and
Unfortunate.
let's talk about, well, obviously that matters, but let's talk about why it matters. One of the other statistics in the book is 15% of check writers are female.
Mhm.
Is that still about the right number too?
It varies, but it probably somewhere between 15 and 25% of
Okay.
angels. Of
Right, of
angels. Yeah.
angels. And so the reason that's important, and you talk about this in the book, is one of the companies that you talked about is a female incontinence company.
Yes. Mhm.
Female incontinence, for those listeners that don't know, is something that happens to many women who have had children, who, as they approach menopause and as they get older, and there are things that are being studied and created to help with that. But male run, whether male investors as individuals or male run funds, they don't know what a problem this is. Their wives or significant others may not even talk to them about what a problem this is. And they don't necessarily like to talk about the words that are involved in these conversations. And so they aren't writing the checks for these types of things. And when it comes to women's health, that's something that really, my background in defending doctors and providers in medical malpractice cases for so many years, that really gets me fired up because there are so many women's health issues that have not been studied and that have not been addressed and now may not be funded so that they can be studied and addressed because not enough women are investors into female founded companies. So to me, that is a huge reason that myself and the listeners might want to start thinking, I could make a difference here. I could invest in a company that works for menopause issues or female incontinence issues or all the other, there's so many breast cancer issues, and just like some of the day-to-day life issues that women or people of color go through that men may not understand the value of this thing that they're creating, inventing, innovating. It's a huge, huge, huge impetus for me. Do you find that it is a huge impetus for many people, especially in the life sciences arena, where people really want to see changes made in that specific area?
Yes, and in the last probably 6 to 10 years, we've started to see very specific thesis around various funds. So femtech is become a word that is commonly used now, but 10 years ago you never really heard it. Basically to be about female technology or anything in the female health space,
Mm-hmm.
or anything really related to female health and technology. And so we've seen more femtech funds come about, people who have a specific thesis for that. So it does make it easier in some cases for women, female founders, to be able to raise because now they know, oh, I can go to this fund and they're going to get everything I'm saying, and I'm not going to have to stand in the front of the room and have people like, ooh, like trying to
Yeah.
hide under the table because they don't want to hear the words coming out of their mouth.
Yeah.
Um, the other thing I'll just mention about the whole thing we're related to male, female, and all these things. When you think about the algorithms that are out there right now, most of the algorithms are written by men. So a lot of these female health companies are really struggling on Facebook with Amazon ads, all of these things, because the algorithms will kick out anything that looks like pornography. But
Yes.
talking about pelvic floor health is absolutely not pornographic, and they can talk about erectile dysfunction all day, but they can't talk about, these other things. So it really makes it so, so, so challenging on so many levels. So it isn't just at the funding level, it's at the other levels too. So that's why I think we as women have to just keep voting with our dollars
Yeah.
and our time in so many different ways, not just by investing, but by what we buy, where we shop, how we bank, all those kind of things.
Yeah, and to stay on the gender thing for just one more minute, because one of the studies that you cite in the book that I had heard before, and it's just it's actually not surprising to me, but it's a wonderful illustration of the differences in the way that men and women can be treated in business. And that is when male founders are going up for investment, the questions that they ask are it's called promotion focused. They are questions about the opportunity that is there for the investors, all the ways in which it can grow. I think of that as a lawyer as it's almost like direct examination questions, great big watermelons thrown up so that people can hit them out of the park and make this fabulous point about all the growth that can be had. When female founders are presenting to get investment, the questions tend to be prevention focused, focused on risk, which to me is cross examination. And so I know from having seen witnesses testify, direct examination is very comfortable. It's very collegial. You know that you're working with people that like you and are into what you're doing. And then on the other side, being cross examined is very difficult, very challenging. So, in all aspects, the algorithm you mentioned, the people who are writing the checks, and even the words that you use, you mentioned, the way in which they are questioned, women are really at a disadvantage in large part because the investors don't look like them. And so a good way to change that, and the same for Black angels, a good way to change that is to make sure that the investors look like the founders. And that is a lot of what you talk about for the remainder of the book, how to make that happen. So one of the things you say in the book is that anyone can invest $50 with a donor advised fund, right? Go ahead.
No, the $50 is with equity crowdfunding.
Okay. So explain that for the listeners.
Okay, so crowdfunding, many people have heard of before because that would be maybe equivalent to like GoFundMe or a Kickstarter or Indiegogo campaign. So there's many different types of crowdfunding. Some people have heard of donation-based crowdfunding or rewards-based. Those are the things I just mentioned. In 2016, the Securities and Exchange Commission changed things up so that now people can invest for as little as $50 in what's called equity crowdfunding, meaning that they get a little piece of ownership, a very small piece of ownership, in exchange for their investment. So there are platforms that people can go onto and they can just peruse and start to look around at what they might want to invest in, or even just to see what's out there. I mean, I think it's just fascinating to go onto the sites and just look around. You don't have to do anything. The three big guys are republic.com, WeFunder.com, and StartEngine.com, those three. And all of them have, various different types of companies and things that you can invest in. So that is a way that anybody, well, I say anybody who has a bank account and internet access, can invest in an early stage company who wants to. Um, when you get into the higher dollar amounts, or if you're going to invest directly into a private company and not through a platform, you need to be what's called accredited. And the accredited investor definition just means that you have a certain level of income or wealth. So you have to have at least $200,000 in income, $300,000 if you include a spouse, or $1 million in net worth minus your home. So that's a high bar, and
Mhm.
so for a long time that excluded a lot of people. So that's why I believe that the this whole asset class, all of this idea about investing in a company, we can watch shows on TV about, oh, you're going to get investment in my company and things like that, but it really does look like you have to be rich, you have to be well connected, you have to be invited into the room. Equity crowdfunding starts to democratize that. It starts to allow anyone who wants to be able to participate and get started. And I love it also because younger people can get started even before they would possibly hit those income or wealth levels. And so they can, I wish I would have had the ability to do this when I was like 22 years old coming out of college. I would have been like, oh, I can take, $200 and put that into something. I can watch it grow, or I can, do pick a couple different companies even with that. And, you can start to get a real diversified portfolio, as we talk about, which is you don't want to put all your eggs in one basket here. And that's just a great Oh, to me, equity crowdfunding is a great starting point.
Yeah, let me ask you something about that because for some people who are listening, they're like, oh, this sounds like a great idea. And I watch Shark Tank. And so I know how that works where people come in and they pitch their company and then people invest. If I want to do this equity crowdfunding, do I get to watch someone pitch? How
Yeah.
do I get to choose where the money goes? Tell us more about that.
You get to watch the pitches because each of the offerings that are put up on these platforms, they have a certain, kind of format to them. So there's a video usually that is the pitch. It's basically what you would see on a show like Shark
Yeah.
Tank. They have information about the company, and then they'll go into a lot more detail. They'll go into things about their financials and all kinds of stuff like that. My favorite part of any of these platforms, after you get to watch the video and you learn a little bit about the company, is that there's a comment section. Well, there's some gold nuggets in that comment section because you get to see now what other people are asking that maybe you didn't think about,
Yeah.
and the CEO or whoever the main person, point person, it's usually the CEO, will answer those questions, and they cannot answer the questions off the platform. So they have to answer all the questions on the platform. So it's not like I could be friends with you, Heather, and I'm going to say, "Oh,
Yeah.
I'll tell you on the side." No, 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 none of that. So everything is very transparent, and that's what I really like about these platforms because everybody knows the same amount of information, and there's no like, "Oh, there's something secret going on here." So I like it.
Yeah, that's great. It really democratizes it, right? Like I get to see all the answers, not just the answers that they want me to see. And I can ask questions and I can learn from other people's questions. I just think it's absolutely phenomenal. Now, let's talk. Well, there's two more things. Lots of things popping around my head. When one of the things in the book, and I want to understand this, if people were going to give to a charity, say a women's health charity, and they're like, oh, I could invest that instead, would they do that through equity crowdfunding? Is that the way that they would make that happen?
No. So, but you can use philanthropic dollars to invest in a for-profit company. That's a whole different thing.
Mm-hmm.
But there's a lot of money that's sitting out in what are called donor advised funds. And a donor advised fund is basically a way that somebody can make a charitable contribution. They get their tax deduction immediately in the year that they're giving the contribution, but it gets held in like a kitty. And then that can get parsed out to charities over time. Maybe you don't want to donate all of the money to a charity in that one particular year. So you parse it out over 4 or 5, however many years. But people put money into these donor advised funds, and there are literally hundreds of billions of dollars sitting in donor advised funds, not doing anything really right now. I mean, they're probably invested in maybe a mutual fund or money market account or something like that. But that money actually in the interim, because it's in a fund, can be used in some instances to invest in a for-profit private company that can help women, people of color, help with
Mm-hmm.
direct innovation, all of those types of things. Now, here's the tricky part. When the money comes back, it cannot come back to you directly as the donor, because remember, you already took your tax deduction, right?
Yeah.
But it can magnify within your account. So then you decide, well, okay, we'll just use easy numbers. Like I had $100. I took that money and I took it and invested it elsewhere. Now it came back and there's $300. Well, now I have $300 to donate to charity instead of $100. And in
Mm-hmm.
the meantime, I was able to help a female founder, a entrepreneur who was working on women's health, whatever your reasons are. And I just love that concept. And I don't think very many people are talking about it because it isn't something that's super easy. You don't just go to Fidelity and say, hey, I want to do this. I mean, you do have to have what's called a self-directed donor advised fund. So there's a possibility you'd have to move money. But nowadays, there are more and more places, and I talk about it a lot on my podcast, about how you can find even some 501c3. So that would be a nonprofit entity already that is working on investing in for-profit underrepresented founders. One of them is Inspire Access. I love them. And they're doing a lot to really help move the needle for how much money goes to women and people of color.
Yeah, there's a lot to this, and your book is very good at breaking it all down and breaking down, as you mentioned, the donor advised fund, the equity based crowdfunding, also Reg CF is That's another way to
Yeah,
refer
that's
to
just
that.
another way to say the crowdfunding thing.
Yeah.
That's the short version.
Now, if people, but it sounds like if one of the listeners here is like, you know what, I would like to do this. I want to just try it out, see what happens. The best way to sort of begin is equity-based crowdfunding. Sounds like that's the best way to sort of dip your toe in. And then
Yeah.
if you fall under that definition of an accredited investor, then you can start playing on your own and seeing whether or not you like it. Um, what is so I was talking to as I mentioned to you earlier before we turned on the camera. I'm fired up about this. I just think it's really important and interesting and something that we don't talk about enough. But there I was talking to someone about it today and he said, well, what's the return on these investments? And I said to him, well, the return for me is the feeling good, the personal development, the networking, the helping women, like that in and of itself is a return. But of course, we want to know if I'm going to invest $50, what are the chances I'm going to get my $50 back and or more than that? What's the answer to that?
Yeah. Okay. So I think that the statistics on how much of a return come back on equity crowdfunding is probably, we're still in the early days. But I can tell you overall for the asset class. So it should apply to equity crowdfunding, but I don't have specific data on equity crowdfunding. So if you're
Right.
just talking about $50, I'm not really sure. However, overall, we've been tracking it at the Angel Capital Association for years and years and years. And we've seen historically, if you have a diversified portfolio, and that means you can't just be like, oh, I'm going to pick this one and that one, and I'm going to wait. You know, can't do that. You have to get yourself into a situation. That's why I love funds so much, so that people can make one investment, but they get exposure to maybe 10 companies. That's like to me ideal, because now you have somebody else who's helping to manage that money and make sure that the investments that it's going into, there's diligence done and good things like that. But you also, as the investor, you aren't necessarily saying, oh my gosh, I only have like one or two investments. See, that's scary.
Mhm.
So I always think, that's kind of the way to go. But our statistics have shown over time, it's about a 25 to 27% IRR.
Very good. So if someone invests $100, they're going to get back probably 25 to $27 on that. And is that over a certain period of time?
Usually it's over, it depends. And we have like a whole IRR chart about, if you invest it for, a year, 2 years, 3 years, whatever. But I would say the average investment in Angel Life is somewhere between 3 and 7 years. So it is not a liquid asset class. So that's why I always tell people, like, don't use it is risky. Like, don't use your kid's college fund
Right.
and they're 18. Like, don't do that. So you
Right.
just want to be careful that I always say 5 to 10 max percent of your investable assets is what you would use. It's kind of like when you think about things in buckets, like I'm going to put, maybe I'm going to go after my portfolio to have a higher risk, higher return in some certain things, and lower risk, lower return in other things. And, everybody has their own strategy about how they're going to figure that out. With angel investing, because that asset class is illiquid and you really don't know when you're going to start to get the money back, I always say that's the piece that you should just have that little bucket, and you've decided this is how much over time I'm going to invest. This is why I put the Halo strategy into the book, because I did not have a strategy. I did not do a very good job having a thesis, and I wish I had had a thesis. So I now look back and I thought, oh, I could have been a little smarter about this, because I was like, oh, I love this entrepreneur. And I hear it from new angels over and over and over again. They meet entrepreneurs and they're like, oh, I love them. They're so great. Look at what they're doing. Oh, they're saving the world. I got to invest. And I was totally like that. And that's great. But I always caution people, like, just watch for a while, like, get to know people. As I got to be a little bit more seasoned as an angel, I met somebody in 2015 and we didn't make an investment in her until 2021.
Yeah.
So building relationships, getting to know the companies, learning about what they're doing, these are all good things to do in order to do your diligence.
Yeah. And one of the things you use the word thesis, and someone has used that word to me before and I didn't know what they meant. But I think I know when you talk about an investment thesis, it's what types of company are you investing in, how developed they are, what kind of money, so that you're sort of spread out and you have a strategy as opposed to just, as you said, being like, I love this founder, let me give her a bunch or him a bunch of money. And
Right.
in the book, you call that the halo strategy.
That's right.
Okay.
Yes. Because if I could have said, okay, I really care about women's health, I'm going to invest X number of dollars over X number of time, and I want to make sure I've invested in, let's say, 15 companies. If I had that kind of a thought process, then I could have probably gotten my portfolio to be a little bit more balanced. Let's just put it
Mm-hmm.
that way,
Mm-hmm.
as opposed to like, I want to try this and I want to try that and I want to try this. But I mean, I did all that, and that was why I could write the book. So I kind of feel like I had to write the book because I made all these mistakes and I
Yes.
don't want other people to do it. And I did it and I learned, so I better share, you know?
Yeah, and it's such a good book. I mean, it is. I will have to reread it because there's some stuff, as you can tell from my questioning, that was still confusing to me. You know, the difference between a donor advised fund and an equity based crowdfunding. I just knew that both of those were things I could do. And
Right,
so
right,
going back through, but really the chapters on women, Black owned companies, the discrepancies there, the why chapters, especially, I think will really get people motivated. And you have a phenomenal podcast. I mentioned it a little bit earlier. I haven't listened to today's episode yet about women's health, but you have had people on about how your attitude towards money impacts your investment strategies, life sciences. The name of the podcast is Angel Next Door, right?
right. Yep.
So we're going to put links to that. We're going to put links to you because on your website, you have all of these things where people can find all of the assets that are in the book. We'll put a link to the book in the show notes, and we will have people connecting in all those places and hopefully making some investments one way or another. Before I let you go, I want to ask you those final three questions that we ask everyone. And the first question is about believing. I think that everyone's trying to believe something. What belief are you currently working on?
Well, I really have this belief in obviously female founders. And that is something that I've been really thinking a lot about because this 3% number we were talking about before, it bothers me because yes, it's a bad statistic. I mean, we all want it to be better. But if I also don't like the fact that we're like, boo hoo, we only get 3%, right? We need to change the narrative. And if we can start to see more and more success stories for women and make that the narrative,
Yeah.
that's what I believe in. Those are the things I want to see so that people will think to themselves, you know what? It's a smart decision to invest in women. Not, oh, yes, we should invest in women. Oh, poor women, you know? No, it's smart.
I love that because an investor doesn't care. I mean, not to be rude, but like I always say, know your jury. This jury that might feel bad for women, but they want to know, am I going to make my money back? And you've got some great statistics, some great evidence, the way I talk about it in the book about proof that with investing in women, you will. So I love that belief. I'm with you on that one. What book would you recommend to my listeners other than your own?
So I love Susie DeVille's book, Buoyant, and
Oh my
it
gosh,
has
thank you.
so many great things in it to help. And I love that she has her tagline talks about the entrepreneurial mindset. And I had her on my podcast to talk about how just thinking in a more creative way, letting your brain kind of take a break for a minute and just be able to think can actually be so beneficial. And entrepreneurs, they're running like ragged. Everybody is nowadays. I mean, there's so much content being thrown at us all the time. How can we really start to reset? And I just love her book for that reason.
I love it too. I just started it. So, very good recommendation. And then the last question is my favorite question. Your answer to this question will be added to the Elegant Warrior Spotify playlist. What is your theme song, my friend Marcia? What song is playing when you are walking onto the stage of life?
Yes, I think it has to be We're Unstoppable.
Love it. I love it. I love the work that you're doing. I have loved it since I met you and love it even more since I've read your book. Everyone should read this book just to understand more about this really important topic. Marcia, thank you for writing it. I know it was a lot of work and it's a beautiful book.
Oh, well, thank you so very much. And thanks for having me.
My pleasure.